Okay, you guys, I am going to show you how to prepare T accounts. So this exercise wants us to post the above transactions to the T accounts, and then we're going to calculate the adjusted cost of goods sold for the period. And a question like this is something I learned in managerial accounting, so I'm sure you probably will as well. Before we begin recording the transactions, the prompt is telling us that we begin with no inventory, which means on these accounts we're just going to put a 0 there. Alright, and so that again shows that 0 beginning balance. Okay, so starting with A, it says we purchased $94,000 in raw materials for cash. I'm gonna write the journal entry for it and then record it to show you guys how that correlates. So when we purchase that raw material, that means our raw materials would get a debit for that $94,000, and then cash would get the credit, since that's what we use to buy the materials. So for A, we have raw materials getting the debit really quickly. All right, so we have debits on the left and we have credits on the right. So raw materials, we will put that debit on the left side of this for that $94,000, and then for cash we'll do $94,000 on the right side to show that credit. So B says $89,000 in raw materials were used in production. Of this amount, $78,000 was direct materials and the remainder was indirect material. So we got to do some math first. Just super simple. All we're gonna do is take that $89,000 and subtract it by $78,000, and that's gonna give us $11,000. So for this one, we are going to debit work in process. We're also going to debit manufacturing overhead, and then we would credit raw materials. Okay, so our work in process amount is going to be the $78,000. Our second debit is going to be the $11,000, and then our final one will be the $89,000, which is obviously those two just added up. And see, these are on the debit side and this will be on the credit side, showing that balance, and that is B. Let's go to C, and that says paid employees $132,000 cash. Of this amount, $112,000 was direct labor and the remainder was indirect labor. So let's clear this out so we have some space. We also have to do a little bit of math here. Super easy again. We're going to take $132,000 and subtract it by $112,000, and this is going to give us $20,000. To record this, what we're going to do is debit work in process. Okay, our second debit is going to be manufacturing overhead, and then our credit is going to be cash. So we're paying our employees in cash. So work in process, we're going to debit it for the $112,000. Okay, the second debit is going to be that $20,000, and so when we add those together, it'll be $132,000. And so let's go ahead and put those in. We'll put work in process on the left side. So for C, we'll put $112,000. And then we'll do manufacturing overhead. So we'll put C right here as well for $20,000. And then cash, we'll put C here as well. And that'll be $132,000. $132,000. All right, so C is done. All right, so D says we paid $143,000 for additional manufacturing overhead costs. Going to debit manufacturing overhead, and the amount is going to be for that $143,000. Our credit is going to be cash. That'll be $143,000 as well, and that is D. E says applied manufacturing overhead of $152,000 to production using the company's predetermined overhead rate. So for E, we're going to debit work in process for that $152,000, and we are going to credit manufacturing overhead. That will be for that $152,000 too. Alright, so now we'll take E and debit 152, and we're going to credit manufacturing overhead 152, and that is going to be E. Next we have F, and it says all of the jobs in process at the end of the month were completed. Our debit is going to be finished goods and our credit is going to be work in process. And to get the work in process amount, we're going to have to total up our work in process. So that's going to be these amounts. So we'll take $78,000 plus $112,000 plus $152,000 is going to be $342,000. So our debit for this will be $342, and $342 will be the credit. So for F, we're going to debit finished goods, $342,000 $342,000. Then we're going to credit work in process for the same amount. All right, and that is F. So next up we have G, and it says all of the completed jobs were shipped to customers. So for G, we are going to debit cost of goods sold, and we're going to debit cost of goods sold for that $342,000. Okay, and then our credit is going to be for finished goods for $342,000 as well. So let's go ahead and put those in. We have cost of goods sold for $342 and finished goods. We will also do for $342. And H says any underapplied or overapplied overhead was closed to cost of goods sold. So for H, we're going to be debiting cost of goods sold, and we got to do some math for this one as well. And then we will credit manufacturing overhead. So what we're gonna do to figure this out is we will be taking this, adding those together, and we'll subtract it by that. So we'll do 11,000 plus 20,000 plus 143,000. Okay, let's total that first really fast. So this is going to be 100. So this is going to be 174,000. All right, and then we will subtract that by the 152,000, and that's going to give us 22,000. So we will be debiting cost of goods sold 22,000, and we'll credit manufacturing overhead 22,000. 22, and then H. 22. And that is the last journal entry, but we got to figure out totals now. So let's start with cash. So I'll just write it here. So 94,000 plus 132 plus 143,000. That's going to be 369,000, and that is our total. Okay, let's go over to raw materials. We're going to take that 94,000 and subtract it by the 89,000. It's going to give us 5,000. Okay, and that will go right here to 5,000. That one's done. Next up, we have work in process. So for this one, what we'll do is add up these three, and then we'll subtract it by that number. That obviously is 342, which we figured, so this finished goods is also going to have a $0 balance. Okay, and then for manufacturing overhead, we're gonna add these together and subtract it by these. So we're gonna do 11,000 plus 20,000 plus 143,000. This will equal 174,000. And so we'll subtract it by that 152. It's going to give us 22,000, and then we're going to have to also subtract that 22,000 from right there. It's going to give us a $0 balance. Okay, so we'll put that 0 right there. And then now we have cost of goods sold that we have to figure out, and what we're going to do is just add $342,000 to $22,000. So 342,000 plus 22. So it's going to be 364,000, and that's going to go right here on the debit side of cost of goods sold. The last thing it wants us to do is determine the cost of goods sold, and to do that, all we're going to do is take our ending balance over here from cost of goods sold and put it right here as our cost of goods sold. So this is going to be 364,000, and that completes it. And that is how we would prepare T accounts and then find the ending balance of them. Let me know if you guys have any questions.